What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, I want to show you a couple of accumulator season farms that I will be using in the crab market that we are in now. Of course, this is not financial advice. I'm not a financial advisor. I'm not telling you to use these farms. I'm just showing you two of the farms that I'm using. And yes, there are other ones I'm using as well. I talk about those in the Discord, but I want to show you guys these two and explain the reasons why I'm using them to accumulate the coins that I'm bullish on. But before we get into that, I want to say thanks to our channel sponsor, OKX. Check out the DEX-like experience on a SEX with hundreds of different trading pairs as well as different features going from trading bots, margin trading, limit orders, CFI, you name it. OKX is offering tons of trading pairs with low trading fees. Get started today in the link in the description below. Okay, so let's go ahead and show you guys Osmosis. If you guys are unfamiliar with what Osmosis is, it is a DEX that's built on the Cosmos ecosystem. Osmosis is its own chain in it of itself. So like you have Cosmos, you have Juno, you have Luna, you have all these different chains that are built on Cosmos, which is Tendermint, and Osmosis happens to be one of those chains that it's built on. In Osmosis, there are several different pools, and we're going to go ahead and show you guys a couple of them now. As you can see, a lot of these are offering different APRs, like the Atom Osmo pool is offering 52%. And it also has superfluid staking, so it actually has additional. So it's actually about 67%. If you guys don't know what superfluid staking is, the TLDR on it is you're able to bond your LP token or a portion of it and act like you're staking the Osmo token. So extra rewards and you still have governance with it. It's a pretty sweet if you ask me. You can see these are the different pools, 52%, 33%, and actually there is a really neat app. It's called Dexmos. Dexmos will give you the list of all the different APRs that are shown and not shown on Osmosis. Yes, there are ones that are not shown. Let me show you one. Go on Dexmos, you guys can see here, you have the internal reward and the external return. These are two different returns. The external is going to be paid in the other token. So let's show you guys Atom Stars. If we go over to, you can click on any of these if you guys are using Dexmos. I'll put the link in the description below. But if you click on any of the links, it'll take you over to see what's up on the Osmo pool. This is pool 611. And you can see here, bonus bonding reward. Pools bonding over 14 days will get the additional bonding reward. So if you're bonding over 14 days, you're going to get this 37% here. And you're also going to get the 179% external return. So theoretically, it's going to be over 220%. That's pretty saucy if you ask me. Now, you can look at all these other pools as well and say, oh man, these are cool, this is cool, this is good, this is good. But I'm using Osmosis in order to accumulate the coins that I'm bullish on. Let's say, for example, I'm extremely bullish on Juno. Well, what you can do is you can go up here and you can say, Juno. Now, when you type in Juno, you get several different pools. You got Neta Juno, Juno XKI, you got Juno UST, and all kinds of different pools. Typically, when you're farming, you do look for the highest yields that have sustainable returns and low impermanent loss. So you would try to pick the pools that have similar and like pairs. Juno and Osmo, those two tokens usually move in conjunction with each other. When one goes up, the other goes up. It's just because they're built on the same ecosystem. Juno UST are not built in conjunction with each other. UST doesn't move. It's a stable coin. Juno either goes up or goes down. So you can see possible impermanent loss both ways. Now, is 30% worth it for you? That's entirely up to you what you want to choose. Now, actually, it is actually about 37% because you do get the additional swap return. But you can use these pools to accumulate a bag of Juno. Just break down some numbers for you. Let's say, for example, I invest $1,000 into the Juno UST pool. Whereas normally when I buy Juno, it's just going to be $1,000. Boom. Yes, of course I can stake it. But let's theoretically say staking doesn't exist. Well, I throw $1,000 into Juno and Juno's price stays the same. Well, I still have $1,000 at the end of the day. However, if I threw it into Osmosis, and the price stayed the same, I would have $1,370 because there's a 37% APR. Now, if I compound that, it'll probably end up being about $1,450 to $1,500. So I just got some free money. So using a DeFi protocol like Osmosis, you can build the bags you're bullish on. So we have Juno. Let's say, for example, you're a Luna bull and you only want Luna. Well, you can do a Luna UST pool. You can do a Luna Atom pool. You can do a Luna Osmo pool. There's so many different pools you can play around with. Now, let's say, for example, you just want Akash. I mean, some people are like, nah, I only want AKT. You can do that too. You can pair it with Akash Atom, Akash Osmo. These are two similar pairs and like pairs. As you can see here, dude, 102%. That's over 3 times the staking return on Akash. And usually Akash and Osmo, actually Osmo usually moves a lot more than the Akash token, currently at least. But that's how you can use different pools and tokens like this. Of course, this is not without risk, because if you are pairing with the Osmo pool or the Osmo token, you are becoming the pool too. So the rewards paid are paired also with the token you're LPing with. Now, if we go back over to Osmosis, a couple of other features I really like about the Osmosis pool, and if you're using the superfluid staking pools, is the airdrops. That is something you cannot even calculate. But Osmo is one of the airdrop tokens that I have on my list that most protocols and most projects reward the users that are staking the Osmo token because, well, they want to get on the good side, and Osmo happens to be the #1 DEX on the Cosmos ecosystem. So again, we'll run down the different reward incentives from this. First, of course, you got the simple Osmo rewards. Second, you get additional rewards from swap fees. Third, you can get the dual incentive rewards, as in like if Akash and Osmo is being rewarded with external incentives, it'll pay you Osmo, and then the Akash team will be paying you an Akash. And then you have the swap fees. So those are 3 different incentives right there. Now wait, there's more. Remember, airdrops. Now, different projects and protocols will airdrop the Osmo stakers. So that is the 4 different revenue sources that are on the Osmo ecosystem. Okay, so the last farm I want to talk about is Beethoven Finance. I really like Beethoven Finance over on the Phantom ecosystem for several different reasons, but in general, it is the different revenue sources that it provides. If you guys go over to the Invest and Farm tab on the Beethoven Finance, you can actually pick different pairs and filter to the type of token you're looking to do. Let's say, for example, you want to diversify your risk and spread it through different tokens or the big basket asset or blue chip tokens. Well, you can do index fund pools. You can see here, you can choose to get Luna, UST, and Phantom exposure. You can say, nah, I want to do something more stable. I want to do something more blue chippy, and I want no exposure to stable coins. Well, they have something that allows you to do ETH, BTC, Phantom. And let's say, for example, you do want exposure to a stable coin. Well, you can even do something like USDC, Phantom, Bitcoin, ETH. And you can get creative with these different pairs. Let's say you're a DeFi maxi and you really like the Phantom ecosystem and you want exposure to all the different assets, but you don't know which one to pick. Well, you can see here you can get exposure to Phantom, Spirit, Boo, Taro, AnySwap, Scream, Beats, all in one token without having to go out there and buy a bunch of different tokens. So these are just different ways you can get exposure to the Phantom ecosystem and other tokens in general by using the Beethoven Finance platform, and you get paid to do it. That is the best part about it. Now, let's say you're a stablecoin maxi. Well, they have a lot of awesome stablecoin pools, going from 27, actually like 2%, to as high as some that have partial stablecoin pools, paying up to 64% APR. Remember, this is APR, not APY. Well, let's say you only want to touch stablecoins. Well, you got one here paying 27% APR. You also got one paying 22%. Just different pools in general. Now, this is the first revenue source. The second revenue source is the dual incentives. The first one is normally paid in beats, but some of these pools actually pay dual incentives. As you can see here, you can get paid 4% in beats and then 23% in the Deuce token. And then, of course, you have the swap APRs. The TLDR with these 2 different farms, Osmosis and Beethoven Finance, is the extra revenue streams that I really like about them. They have different synergies involved with all these other projects, and other projects want to, I guess you can say, pay homage to them by giving token incentives to get on the good side. So I'm using Beethoven Finance and Osmosis to build the bags in different positions that I want. As you can see, if you want to get a little more degen and a little more risky and mainly get exposure to the Phantom ecosystem, you can select to only do the Phantom pools right here. And this will allow you to choose these different ones. And then let's say you're an uber build maxi, you can go into the boosted pools. Now these have the most revenue streams. Let's show you guys this one, the Overture, Grim, and the Mirror World. This is a new pool. But you can see there is a laundry list of different incentives in this one. You have swap fees, you have beats, you have the earn boosted APR because they are yield bearing assets. You have the XBOO boosted APR, all kinds of different APRs coming from different ways. And on top of this, those beats that you farm, you can even throw them into the stake pool right here. When you're staking these, you can earn an additional yield with these. And the Beats team is creative when they did this. Instead of just staking the governance token itself, they make you stake an LP token. So now that is a yield-bearing asset in itself. Then they're paying you to stake your LP token and paying you for staking it. So now you get that additional revenue stream of the staking yield, the LP swap fees. But wait, there is more. You also have bribes. So now you have people bribing you and saying, hey, vote on my pool. Hey, vote on my pool. And you get all kinds of different rewards. You can get Deuce, you can get Luna, you can get USD, USDC, you can get Wrap Bitcoin, all kinds of different yields. I mean, these bribes are really lucrative. It's similar to like the early days of Convex, not financial advice, of course. So these are two of my favorite farms I like to use for accumulator season and accumulate different coins I'm bullish on. Yes, there are many other farms that I'm using as well. I'll go ahead and mention a couple more in the Discord. And if you guys enjoyed this video, go ahead and smash up that like, subscribe to the channel, and let's go ahead and hit you guys with a wisdom one-liner. If you guys are wanting to jump in the Discord, there's a link in the description below. And go ahead and hit you guys with Proverbs chapter 16, verses 32. Better a patient person than a warrior. One with self-control than one who takes the city. Or that's so true, man. Self-control is always good.